I would not be investing in Apple based on a 7.3% growth rate. Why would I do that when I can get a better growth rate out of SPY?
What's up, ladies and gentlemen? We're gonna talk about. So this is on Patreon now. So this is Mike, by the way. You've seen him in the AI videos, and we've talked about how we're transitioning into just preparing for AI as far as investments and all that goes. So we are going to talk about a little bit of dividend stuff. There's some data in here. Um, that being said, this is going to be I guess a conglomerate, I guess, of kind of everything you can go through. And I like this approach, but I want to talk about the AI ones that I'm buying. So I want to show off all the data here. So we're just gonna just dive into it. Now, real quick, we got Apple, Google, Meta, Microsoft, and then a fifth one. A fifth one that we'll get into, but we're gonna save that one for the end, and it's gonna make sense then. Let's just kick it off with Apple. No particular order. What are we going over here, Mike? What are we when we're looking at this? Because these are the tickers that I'm buying. These are the AI tickers. But what data do we see up here on screen right now?
Yeah, so this is a spreadsheet that I came up with. Actually, been developing this for a while, and what it really is trying to do is one, get basic information, but also help predict a couple of things. Is it at a good price? Is it a good future investment? Is it a good income stock? All of that is done on the spreadsheet for me. You and I have been working on this together because I had some questions a while back. That's what I'm trying to encompass in all of this, and then take data from each one of these and then compare it to other stocks. So you get a true understanding whether you want to buy a stock or not, or run an income strategy on a stock, or a dividend if you want this as a dividend stock. So it's trying to encompass a lot of different data for each individual stock, and then give you the ability to compare it to other stocks. So the first column, it really is just basic info: your current price, what the 52-week low and high are, some of the debt and liabilities versus assets and cash on hand. The important part, excuse me, the important part of that first column is that disruptor list. Now, this is where you and I have collaborated and came up with a list of disruptor categories where we can select it, and it helps give a score for that particular stock, which will also generate a potential future growth to help predict that future price target 10 years from now.
Right, and we're talking about the total score up here, or company with health score. Which score are we? When you say it helps give us an overall score?
So the disruptor score is built based on that disruptor category list down at the bottom left.
Hmm. Right, this one.
Yeah, your company health score is just based on, how much debt do they have versus cash, what's their PE, what's their net income and gross profit, gross revenue, free cash flow. That's where the company health score comes in, and then the total is the combination of those two scores.
Just to make it quick, we're just looking at this right here.
Right.
Why would someone? I guess maybe if they didn't agree it was an AI ticker, I guess maybe they would discount that and just look right here. And how high does this go?
The company health score goes up to 100.
Okay, so we're not talking 40 out of 1,000. They're all
No,
out of
no.
100. Does any of them score top? Are there any hundreds out there?
We've got quite a few.
Oh,
Some of the AI stocks are pretty good.
okay.
Google's our top one.
Okay. We'll get let's break down this, and then we can smooth through the other ones. Let's just get them
Sure.
comfortable with looking at this screen.
Yeah,
I was actually more surprised. More cash than debt is a no on Apple.
I was surprised by that too. They've got more debt than cash.
Okay, basic info, assets, liabilities, disruptors. That is something we pick
Hmm.
on here. So, what if someone could make a case? Could they get us to change that, or how would they affect this right here?
So I've been doing it, and you and I have been collaborating again, is we talk about the stocks, we research the news and find out what they're actually invested in.
Mhm.
Like last week, we did a whole segment on Google and what they're invested in. So we're looking at their financial statements and trying and news and trying to see where they're putting their money outside of, let's take Google for example,
Right.
outside of just their search engine. So like Google's invested in DeepMind, they're invested in a healthcare company, they're invested in Waymo. So using that information, that's how we're picking our disruptor categories.
And then, I guess let's walk through the green and red boxes. So we got gross revenue up here.
Hmm.
Uh, so just pretty basic, right? Just getting the data right there.
Yep.
And then we have your 5-year growth, and then is the growth trending positive? Yes. Does the growth validate an investment? No. Why this on Apple?
So what I did was I'm comparing everything to SPY.
Okay.
Basically, let's just say SPY is 10%, and I think in the formula I've got 12.5%. If a company's projected growth rate is less than SPY, that's a no for me because I'd almost rather just invest in SPY.
Right.
Now that doesn't include all the caveats, right? Like we think this is a future growth stock because of
Mhm.
all the disruptors. So again, this is more of a data points to help people make decisions. It doesn't mean it's the end all be all, and just because it says no doesn't mean it is an actual no. It's just something to go look at as a guide.
Yeah. So, for instance, if that says no, I should just put my money in SPY. Why would someone say yes? And for instance, you and I have the answer that we think is the answer. Yes, we think AI is not priced in
Right.
because this is all again, all of this data is how do we put it? No
Unbi-
emotions, no, unbiased. Yeah.
Yeah, this is unbiased data. So if Apple was just a company that didn't have any future prospects, I would
Mhm.
not be investing in Apple based on a 7.3% growth rate. Why would I do that when I can get a better growth rate out of SPY?
Yeah.
Um, and that's also why I've developed this spreadsheet, was because people were investing, and I say people, me and other people that we know in our group, randomly just pick stuff and don't actually use or didn't actually use data to back up what they were investing in.
Hmm.
So this takes away all the bias and all
YouTube
uh,
opinions.
the opinions. Like, this just shows you right now at 7.34%, it's not a good investment.
Yeah. You'd make money as far as capital efficiency. You'd make more money just plopping it down in SPY
Correct.
so far.
Yep.
Okay. So next we have, I guess I have my pin here. We have gross profits. Pretty basic here. Does the gross profit validate an investment? Yeah. So obviously they make money.
Hmm.
Uh, Net income. No surprise here. Apple does make money.
Yep.
Um, do we need to break things down, or how much does someone need to know to understand these charts? Because when I see it, if I'm brand new into investing, I might see a lot of numbers and get scared. Net income, gross profit, gross revenue, all of that is what I would call common sense, basic knowledge. But for maybe someone not on that level, what's the
So
TLDR on these?
so the simple explanation is, if you see a green yes, it's better than the average for that sector. So I've actually compiled the averages for those sectors, whether it's gross profit, net income, or free cash flow, and it measures what the 5-year projected outcome is versus what the average is. And if it's above the average, it's a yes.
Okay.
So in my book, it makes it real simple. You don't have to worry about trying to know. It's good to know what free cash flow is and net income and gross profit is,
Mhm.
but you can learn that over time, which is kind of what I did.
Mhm.
Um, this made it real simple for me to go, okay, I can see I've got 4 yeses. I'm good to go with the stock, right?
Yeah. More green than red, right?
More green than red. Makes it real simple.
We'll keep the boxes going. We got free cash flow, right? So we know they're making money, and not spending all of it,
Right. And
right?
just for everyone's knowledge, free cash flow is probably the second most important behind a growing gross revenue.
Mhm. Okay, so go over these 2 because I feel like the rest we could probably speed it up on, but go over these 2 boxes right here. We got company health scores, company key ratios, and score.
So the company health score is what creates that 45.75 up above.
Mhm.
And that's just um, taking all of our rankings based on the different um, outcomes, projected 5-year outcomes, and
Mhm.
putting a score to that. The one below it, it's also ranking. Um,
People love to talk about the PE ratio.
yeah, and this one's a little more. This one's a little more in depth. Not sure if I can go into this one really quickly,
Okay.
but what I'm trying to do with this in a nutshell is create a score to see how cheap a stock is,
Okay.
and that could be a whole session on itself.
Yeah. So right now, higher the number, the better, or is it like golf? Lower the number, the better.
Lower on this one, the lower the number. So the company key ratio, the lower the number, the better.
Okay.
On the company health, the higher the better.
All right. Let's jump over here. So last part, I have a huge problem with just glossing over things because there's so much things that to me I've been doing this for a while. I'm like, yep, need it. I could look at it in a snapshot and think
Right,
we're good to go.
right.
Um, okay, so what's the total expected income?
So if you weren't investing, if you just wanted to create an income strategy using the wheel plus dividends,
Okay,
um, what I did is I've created basically a database that goes back and finds out how much you could actually earn if you were to do weeklies.
okay.
Um,
Selling
if you
puts
own,
and calls.
yeah, so sell a put or a call, um, and run the wheel. So you could basically for the capital that you would need to do this with, you could
Mhm.
earn about 11% annually.
That's shown off right here.
Right.
And
Again, the no is
mhm.
because it's lower than what you could make what the average is for other companies.
Okay, okay. So that there's better opportunities on this box.
Correct.
Dividend data. I don't know if I mean, is this a good? I know Apple does pay a dividend.
They do. When I took the screenshot, I had the actual database closed, so it didn't update that port for
Okay.
it.
I wouldn't buy Apple for the dividend.
No,
Someone's probably gonna fire me on that, but
it's less than 1% or maybe right at 1%. It's really bad.
it's like NVIDIA's. It's like
Yeah,
it's more a formality than anything else.
yeah, exactly.
Yeah. All right, I hear you. Okay, so 10-year historical price data. Anyone could you could look at a chart. That's you could see. I guess it's trending up. We got this. Here's your 11-year trend line. Now,
Yep.
are these what are these earnings? What is this price
Those are the price. Those actually correspond to that to the prices next
chart
to it.
over here? Okay.
Yep,
So visually, I guess depending on if you're a numbers person or if you're a chart person, I say it all the time: lower left to the upper right. Got to be doing
yep,
something. It's a lot easier to make money when you're buying things that just do that.
yep.
Okay, so let's talk about this top right section. This is the what do we call it? The meat and the potatoes,
Right.
the brass tacks, what everyone's probably going to be focused on and excited about. Price predictions. So we got the 2030 price prediction, conservative, and then we have optimistic, and then we'll go over the buy price targets and how you break those down.
Sure.
So
So
first, let's
the
go over conservative.
so the conservative is just extending that linear progression
Mhm.
of the price target from that chart that in the lower right.
Okay.
So it's basically just that's it's about as simple as you can get. Follow that trend line out 10 years, and that's or 5 years, I guess in this case, 6 years.
Mhm.
That's what the expected price is going to be.
Okay. Taking all this data, assuming regular maintenance is maintained, change the
Yeah,
oil, brakes,
yeah,
we get that number. Okay.
correct.
Uh,
The the optimistic one actually takes into account the disruptor stuff that is selected over in the other section of the spreadsheet. Um, and basically, what it does, it uses each disruptor category and adds a percentage to growth,
okay.
revenue growth. Um, but then it's also discounted because it's not happening yet. So it gears it towards more of like an up curve. So it's gonna grow into it. Um,
Okay.
So that's what it's actually using our disruptor categories to help build a price model if those come true.
Okay. So assuming we're right in the research we're doing and kind of what we're thinking and talking about in our AI videos,
Mhm.
that would be more what we're expecting, but going with the non-biased, just strictly numbers up top outside of any bright red flags.
That's correct.
Okay.
It's of course, it's optimistic.
Mhm.
We don't know if it's gonna happen, but
Right.
my guess it's gonna be between one of those 2 numbers. It's gonna be the conservative or the optimistic. So you wanna know both, so you know, like, all right, at the worst case scenario, in 2030, I've increased, my position by 56%.
Yeah. Do any of these total up to about 25,000? Because I'm curious if we could pull like a Kathy Wood. We could just start talking about it now. We got
The Google one's impressive.
okay. Well, Google's on the list. We're gonna go over it. Uh,
Google's impressive.
okay. So today's fair price estimate.
Yeah. So basically, the fair price estimate is basically that same thing. The linear, or sorry, the linear uh, uh, graph right there.
Uh-huh.
If you extended that to today, that's
Mhm.
what the price should be today.
Okay. What is Apple at today? Do we know? Doesn't matter.
Well,
Uh,
it's below the first price target. I can tell you that because it's green.
okay, because this is green. That's a perfect segue into up here. So let's talk about our buy targets. Now, this one got highlighted,
Hmm.
and it says to start dollar cost averaging.
Right.
Okay, so Apple dipped below the 175 price target. So this is when you would start buying. And I thought it was interesting how you dollar cost average. So I'll explain how I do it real quick, and I'll let you explain. So
Sure.
when I dollar cost average, I do this Bitcoin every week. So I buy Bitcoin, but I have the same amount going into my savings account. So when it does dip to one of my zones, or a spot where I like to buy, I take the savings account, dump it in, and it keeps my average lower, right? It weights it down. Because if you just dollar cost average consistently, like you hear on YouTube a lot, eventually you just get locked in. You quit moving your average around because
Mhm.
you're not moving the needle. And I did like your way, so I'll let you explain it. But right now, with the sell off Apple just recently is going through, what was some bad news on China, got a downgrade. Um, so it just hit buy price target 1 of 174.92. Okay, so take it away. What's the start, the 2, the 3, the 4, the 5?
So I made it real simple. I use that linear progression.
Mhm,
If it's above that, I don't want to buy it. If it's right on it or below, that's when I want to start buying. Because as all stocks, it's not going to just go a straight line like it is right there. It's going to
mhm.
go up and down, and the trend line will be up, but it's still going to go up and down up above and below that line.
Just the normal ebb and flow. Okay.
Exactly.
Mhm.
So I'll start the dollar cost average once it hits price target one, and basically it's each of those price targets is going to be a multiple. So right now, let's just take I bought some today or yesterday. I bought one share, and I'll start to do my dollar cost average every week and buy one share um, until it either goes back above, or if it keeps going further, if it hits price target two, I'll start buying two shares. And if it hits
Mhm,
price target three, I start buying three shares. And what I'm doing is weighting my average down by buying more shares as it gets lower.
mhm,
But as soon as it pops up above that trend line, I stop buying.
mhm,
So that's how I get my average price down, um, just by dollar cost averaging. But I kind of like you, I weight it towards the
mhm.
lower price.
Right. Get a little more growth that way.
Yeah,
Um,
because for
yeah,
me, because
growth that way.
for me the goal is the number of shares, not necessarily. I mean, I want a lower price,
Mhm,
but I think the number of shares at a somewhat lower price would be better than just trying to wait for the optimal time to buy. Um, my full load because I I want to be in the stock, and I don't
Mhm.
know. You just never know when it's going to drop or what that low price is going to be. So I'd rather start buying while I can.
Yeah,
So
unless they're
that's kind
subscribed to the channel, and I tell them.
of yeah. You and I have just have different methods. That's all.
Well, this is actually so I'm not even I don't want jokes, I don't wanna confuse people because this is we're talking about investments.
Right.
As a trader, it's different. The
Right.
sizing I have in my investment account is not something I'd be throwing around, in the trading account. And yeah, as far as management goes, it is a lot easier to set these targets up, put it in there, and just kind of be a robot when it comes to it. As
Right.
it hits each buy target, like, do a quick little double check, we still got some green yeses, it's on sale, but it's quick and it's a 5-year thing. And even when it comes to trading, people are asking me like, for instance, I bought a leap in Google, right? It's down the next day due to the pictures thing, and everyone's like, what are you going to do with it? Like, I gave it, even as a trader, I gave it a year's worth of time. I'm not worried about the next day, the next week, the next month, unless something drastically changes. Now, if I
Hmm.
were to come on here and see a whole bunch of just red boxes and my score is now 1, then I would probably quit buying and let things simmer down.
Right.
But without that, just stay the course, and that's why the research is important when you're picking out an investment, and doing things like this, because statistically, there's a little over I think 81, 82% chance the stock you pick won't be here in 5 years. And I don't think people understand that. And if you were to put it up on one of these sheets, it would be blatantly obvious just
Hmm.
how much risk we're going. There'd be a whole lot of no's. There'd be a lot of we're just burning through cash like it's going out of style. We're making a shiny product. Hopefully that plays out. But a lot of stocks are gonna be like that rabbit R1 that I'm buying, but I've already told everybody I'm buying that because it's gonna be a collector's item. That thing's gonna be a flash in the pan, much like many stocks are. Over 6,000 stocks in the market right now, and that's just right now. Now, if you look at the history of things, there's been over 100,000 stocks. Now, they've all heard stocks go up, they've all heard dollar cost average, and they all just most of them went away. So you're over a 90% chance you're just going to fail at this. And without looking at this data, people just get really blindsided by that. So I think the way you have it put out here, as far as investments go, is awesome. Um, and again, when you first showed me this, the only thing I wanted to add was the disruptor score, because I do think we're going through a phase.
Right.
I like this, but there are just some things, and this is what I thought was extremely valuable. We're going to get into the other tickers, but after talking to some asset managers, they can't buy Tesla because all they can grade Tesla on is the cars. Because
Right.
that's what they have on paper. This number right here is what they have on paper,
Hmm.
but we're thinking like, well, maybe this could be a strength, could be a weakness of what retail has is we don't have to abide by those rules. We can give it a dollar amount to think, all right, I'm going to put my money like the company's good. The risk isn't the company. The risk is, are they going to take this route that I think we're going to go, like Tesla breaking into an energy sector? You know, you can't go to a fund manager and say, "I want you to buy Tesla. I want you to put 3 billion in there because they're going to produce a lot of energy." Right now they're trying to make the truck. How many Model X's and Y's? Where's that in the energy field?
Right.
Um, so that I think is huge. I think this is a finely tuned machine now.
Indeed, it is, and we've spent a lot of hours, and we're always fine tuning it. But yeah,
Mhm.
this is a pretty good tool for us.
Yeah, I do like the quick snapshots. It took a while to get the disruptor score down because didn't the
Yeah,
first one send it to 1,000? It was something crazy.
it was out of tune.
Yeah, it was funny. I'd have taken it. Yeah. All right, so Google, you say Google's impressive. So we got a disruptor score of 100, company health score of 61, giving it a total score of 161. Hasn't hit our buy target yet of 130. Uh,
It's
but we
getting
should
closer.
be, yeah, so we're getting close to getting in there.
Yeah.
So good income stock is no. So why such a good score? What brings us down to 8%? I guess I'd have to guess options volume and
The option the options just don't pay them very much, and
Yeah.
it's, I mean, 8% is about all you can expect from it. It really isn't all that great because it doesn't move that much, so you don't really get much of, option premium from it.
Yeah. I guess, yeah, even as a trader, I could have guessed that because with options, you gotta pay to play, and that what you're usually paying for is that volatility when it comes to premium.
Right.
And Google, while it's had some of the most historical surprises ever, one when they released earnings got leaked during market hours. That moved the market. Outside of those days, it just does not, and the volume's not there, which is surprising for Google
Yeah.
as a trade. So
Yeah.
more cash than debt. That's a no. Kind of just hanging out with Apple here.
Yep.
Still on the right growth. Price prediction optimistic. $2,800. So you think Google is going back up to that 3 grand mark or
Uh,
potentially?
it potentially, if everything goes well
Yeah.
for it, it really could.
Yeah, I hope they do.
I do too, because it's one of my faves.
Yeah, and this is the one I'm starting to pick up right now, and I've made a couple videos going over this just because while it is scoring this high, I like it, but it's one of my lowest compared to the others. So that's why I'm going in. I wanted to get my one is like 100. Like I'm trying to maybe I'm getting a little too excited. I could probably wait for cheaper, but I'm ready to get in this. I'm using this to probably to more keep things at bay. Uh, all right, I don't even know what. So again, no specific order here, except for I'm gonna have to edit everything out now because Meta should be number one. Meta always number one. Uh,
So, it's pretty good.
yeah, with 1,700, huh?
It's got a great health score.
Yeah,
I mean, the health score is way up there. It's 82.25, where the disruptor score only came out to be a 30.
yeah. I guess that does make sense. And again, keeping the emotion side because I actually would think this one is better. If they come up with their own AGI, Google's got a lot of data, but I just think Meta has a lot of other data with
Mhm.
the statuses and everything that everybody posts. Everyone posts their feelers online all day, every day. Today, actually, Meta Facebook went down. Now I didn't know because I was asleep, but the amount of people that lost their minds on that it shows me Meta should shut down on the weekends or something. Like Meta should just turn the lights off on Saturdays just for humanity. Um, but again, keeping it all business related, keeping it numbers related, keeping everything the same. This scores lower. But which again, I'm saying that is a plus because Meta is my number one position. And if you follow me and you're not reading what I'm saying right, you're not reading those disclaimers, you might be a lot into Meta. And I wrote it down during this curve over here. Oh, that was brutal.
Yeah.
The come up was great though. Brought my average down.
Yeah.
Um, it's upsetting that it's only 1,700. That should be 17,000. If there's one that's gonna be the Kathy Wood special, this one.
Well, maybe we do some more deep dives in it and see what we come up with.
Nah, we have it down. I will say as we do deep dives and improve this, it would improve all of them,
Mhm.
um, coming from the standpoint of we're making this and producing this, we have to leave our opinions out.
Sure.
Um, so just so everybody knows, I'm saying more to you don't have to worry about my opinion just bleeding in there and just all of a sudden your whole account meta. Okay, so we got a buy target of 318. Good luck. So just got over 500. Never happening again. Better not ever happen again. We better just be on a straight shot to 17. But I will say on our list, this is the first one that's more cash than debt. They are a cash machine.
They are. They have a lot of cash on hand.
Yeah, they're hanging with Powell. They got the money printer. Okay, so Microsoft. This is one I started buying, I guess not last year, the year before. Um, Started going in on that one. This grew up pretty big in my account. So more cash so none of these guys have more cash than debt, which is surprising because I would have thought, especially Apple, had more cash than debt on there.
Right. But
Uh,
but they don't.
Yeah, and then so options wise, still not a good one.
Not a
We're
good
gonna
one.
get into the options here in a little bit because we got a tab specifically for that.
Right.
Obviously not a good dividend stock. Yeah, a lot of these bigger ones, they're still growth companies. Again, the paying a dividend's more a formality. You know, Nvidia's a dividend stock. Find me one person that bought that for the dividend, even one.
That'd be tough.
I'd hate that guy, by the way. Can you imagine just loading up on Nvidia for the dividend and it's just rocketing the way it is?
Oh my god.
Oh, I just buy my Nvidia shares at 160.
Yeah, and every day that dividend percentage keeps going down. I mean, that
Yeah.
it's gotta be like 0.01 at this point.
Would you care though?
No.
That's gotta be like winning the lottery. Your
Yeah.
dividend account is mostly Nvidia. So where are we at on this one? This was just shy of 4. It's in the fours, right? Yeah, in the fours. So we got a price target of 630, optimistic of 1519. So a lot of these, if we're right on AI, and this is again why we've been talking about AI so much, just because the next big phase. I do think I'm leaning more towards all of these prices.
Yeah.
Like, this is cool. It's your conservative. That would honestly be more my bearish case. But, everyone's got their own opinion. The data stays the same.
Yeah, I wanna say, no one has a crystal ball, right? This is we've done our best
Mhm.
to, use data to predict this stuff. It c
Yeah,
but it could be completely wrong, but we're trying to use data to really, um, forecast within a good range, I would say.
right. This is that 5th one that I wanted to go over. Coincidentally, I don't know, is it a coincidence? My top 2 positions have more cash than debt. Just saying. As a trader, I picked that up. Um, Tesla. Okay, now I wanna get your opinion on Tesla because it's one I haven't been buying. I added on to it a little. I guess it's not fair to say because a couple weeks ago, I did buy a little bit more in the investment account, but I've kinda left it just a little, on the side. It's my number 2 position, so I can afford to do that, you know? So I wanna know if you weren't in it, where would you rank this upon anything? Would you buy it? Actually, just give me the whole rundown on Tesla because I know Elon now Elon, he gets clicks, so he's in the news a lot. It's easy to put his name in front of things, and grab that attention, and I gotta say, I've had some pretty thick skin when it comes to that, but maybe it's starting to even drain on me, like, 'cause I do see his tweets, I'm just like, "Come on, another one?" Like, you couldn't be quiet for 5 minutes
Yeah,
before he's in the news for another tweet,
yeah.
uh, which we've talked about, and this will be my last piece before I let you turn the mic over to you. Um, I do think he's hired the right talent. I would be a little bit more nervous if he was the one physically building the robots in cars. I don't think he's, putting down the soldering gun to post a something new on X. Um, but how do you think give me the rundown. What's your opinion on just Elon in general and Tesla? How do they conform, I guess? What do you think on this? Because we couldn't do an AI video and leave Tesla out, but there's a reason why it was the 5th one and not the 1, 2, 3, 4.
So, actually, this is my number 2 pick, uh,
Okay.
ironically, because of the total score.
Mhm.
And they are doing quite a few things that are gonna be disruptors. Autonomous driving, they are doing artificial intelligence, they are working on quantum computing,
Mhm.
um, clean energy. So they've or Elon Musk aside, the company itself, while it still is an automobile company, has its
Mhm.
fingers in a lot of stuff, and that's what I'm betting on.
Yeah.
Um, Unlike you, I didn't really have a big position, so I have been buying because it reached my price targets. So it's now I'm doubling up on my DCAs right now.
Yeah. And we did go over that, right? Like how you buy 1 share, then 2
Yep,
shares, then 3
yep,
shares. Okay. Just
yep.
wanted to I know if we glossed over that. But I will say, I mean, there's a million reasons why I actually do like Tesla. And to be clear, because this is, I don't know if it's even arguably one of the best AI tickers to get because of everything they are involved in. I just did not like his tweet about moving the robotics to another company because we already know he has SpaceX, and there's people that buy Tesla to have access to SpaceX. Like there's other companies that he has that are not Tesla that people love to because you'll watch news come out about that and Tesla drops.
Yeah.
Like everyone was watching Tesla stock when the last rocket went off, like, "Oh, did it blow up?" Like, that has nothing to do with it. Uh,
Yeah, when he tweeted that thing about moving his AI out of Tesla,
mhm,
I really didn't pay much attention to it because he can't do that. He needs the AI platform to do his autonomous vehicles. So, I knew that was a non-starter, right? As soon as I heard the news about it, I was like, That's a non-starter. That cannot happen." It would destroy the entire company.
yeah, and that's the one thing that had me thinking like, "Oh gosh, am I too much into this?" Uh, but
No, they're so entwined. His AI department is so entwined with the car company that it would be virtually impossible to unentangle them.
nice. Okay, that's puts it a little bit more at ease. Like I said, maybe I was just getting. 'Cause I do so one thing I don't like when I am researching stuff, as a trader, it's price levels, price action for me, it's easy, I have an income bias, not a directional bias. With investing, though, it's you have to do the research and see like, so one of the big reasons I like NVIDIA, and why it had even a substantial position in mine over AMD and Intel was their management team, and, obviously that blew up, but, Tesla was the biggest it was Elon and the way he did things, and then look at this income right here should say it all for a lot of people.
Mhm.
As a I can't say new company, but for what they did coming in out of nothing, going from negative, from red to in the black, which is why they call it Black Friday, so most companies do. I don't know why that bugs me when people correct me when I say, "Oh, I was green on the day," and they say, "You mean in the black?" No, I trade stocks, not a retail store. Like, I don't know why that that bugs me, but if I don't say that now, someone's gonna correct me in the comments, and it annoys me. Uh, but, this cash flow business, what is going on here? That's where I want my cash flow. I mean, not I asked you what's going on here, but I mean, it's easy to see why this is getting brought up and why it's still getting talked about. They have more money coming in, they know what to do with.
Yeah, free cash flow is what allows them to invest in other things, right? So $4 billion a year, that's quite a bit of investment.
It's what I wanna make a year. Just
Uh,
a meager 4,000,000,000, you know?
yeah, sure, sure. Yeah, we all do.
Okay, so you got a price target, and I say you, uh, 6 grand, so we're pumping up there again. It's funny because a couple of these price targets, the stocks have already been that high, went through a split, and something I said on a YouTube video a while back is, splits, it almost just set the bar for where it gets to run up again. It's almost like a roller coaster. In
Right.
theory, doesn't actually mean that, just, it's just a number in people's head, maybe because if I told you well, imagine Kathy Wood, Tesla's going to 7,000, 7,500. It did, but you know how crazy? You remember how crazy that sounded when
Yeah,
she said that? And it did. So now if I said Tesla's going to 6,100, who's really batting an eye at that? Because it's already been there before.
right.
Uh,
Yeah. I mean,
so
if they just get one of their technologies, if they get FSD going,
mhm.
it'll reach that price target in no time.
I think I don't know. I don't know about FSD.
It's gonna take
Eh,
some time. I think, they're actually behind Waymo. However,
yeah, I think Elon's gonna be the fault of that. He just doesn't pay the politicians. When I saw and I mean this in a very serious way because when I saw Chevy, the Volt driving around in California, when it got the rights to do it before a Tesla, if I was in California, I would have moved strictly off of that alone. Like, you hang on a second. Tesla is one of the only manufacturers that I know building an EV that has talked about when you get in a wreck, if a metal rod goes through the battery, you basically have a grenade, and it took them a while to fix that. No other companies talked about that. We saw another car company that wasn't waterproof. It flooded, and all of a sudden, their parking lot was a minefield, just cars blowing up. And now we got cars just driving like that's a 3,000-pound machine just running around on its own. The last one I want, I people know how I feel about Chevy, but the last one I want is be walking down the sidewalk and a Chevy Volt mows me down. Like and that to me said enough. Actions over words. And I think Tesla's technology is better, but I think the AI game is going to be a pay the politicians game. And that's why I do actually it's weird to say this, but I do think Waymo does beat them on the autonomous driving.
Yeah.
I think they'll lay the groundwork first, and then Tesla will eventually just have to follow suit. Because how could you say no to Tesla? It's just a superior tech.
Yeah.
Uh,
I think there's always gonna be, in this space, the autonomous driving specifically,
mhm,
there will be multiple players. So I'm not
yeah.
too worried about it.
Are you worried about first mover advantage?
For AI in general,
Yeah,
yeah, but for autonomous driving, I'm not too worried
not
about
so
it.
much.
No.
Okay. Well, you've talked me into it. I got to buy more Tesla. All right, so it's at price target 200. Your next target is 176. If it gets to 130, you're just shoveling it all in, huh? Backing the
Pretty
truck
much.
up
Pretty much.
at 130. I think I would too.
Yeah, when it got below 100 last time, I did buy quite a bit,
Hmm.
and then I don't know why, but I sold it all off, I don't know, a few months ago,
Yeah. Well, you
and
did
just
well.
started over. Yeah, just started over. So, I have been buying recently.
Nice. That's a 20. Revenue growth. I was looking at your price target. So 2035. Okay. Well, let's get million. Let's talk about the next part. People can see. Uh, I'm just getting a little googly eyed over that 6100. Just bringing back the memories. All right, so long-term investing buy list. This one we can kind of go through this one pretty quick because this one. So here's the list, right? You have in phase. In phase is at buy target 2. So is Tesla. Apple just hit buy target 1. The others haven't quite hit it yet, but these are the ones you like. Now, these are again we're gearing more into AI, are we not?
That's correct.
Okay.
Yeah,
How's
this
in phase?
this isn't the full list. This is just a sample for this presentation.
Oh, okay, okay, cool. How does Enphase does that fit? Is there an AI narrative to Enphase or no?
Clean
Is it
energy.
clean energy? Okay.
Clean energy, and AI will have some effect on that.
Okay. Yeah, efficiency, making it work.
Mhm. Yeah, yeah, exactly.
So this is in order of the total score here
Correct.
of which one you'd want to buy now, right?
Right, right,
Okay, so we got Alphabet, Tesla. So that's why you said Tesla's your number 2 position. Meta's number 3.
right.
I don't know
And
if I want to.
what this does, it helps me pick which one I would like to buy. Like, say I only have enough money for 2
Mhm,
or for 1. I'm gonna pick the higher total score. Let's say 1 and 2, like, let's say Google and Tesla are both at a price target 2. I would go
mhm.
ahead and buy Alphabet over Tesla because it's a higher priority for me.
Okay, so this just puts it in a totem pole, basically,
Yes, exactly.
order of priority. Okay.
Yep,
That's a quick and easy one for people to grasp. I like it. I like that list. Um, okay, and then we have now. Personally, I'm getting rid of my dividend account because I'm going that much into AI, losing it. Um, but for everyone that's not, they do have access to your dividend list, right?
correct.
And this is a pretty hefty list.
Pretty
But again, aristocrats, kings, and Actually, I was surprised that even that BITO, the Bitcoin futures, uh, even paid a dividend.
Yeah, and
Uh,
that was a recent addition.
mhm. Uh, but now this I like because if you're a dividend person, you almost need this list.
Yeah,
The amount of YouTubers I've seen talk about dividends, and they just talk out their I'll keep the language clean. But, they're just and they throw out, residual income, and they make it sound like the next best thing. Like, if you're not invested in this, you're just silly. Like you don't know what you're doing. And they love to throw out numbers. And some of the and I say a lot. If it's a dividend stock, if it's paying over 4%, you have some questions. But people they're throwing out this one pays a 12% dividend, this one pays this, and this is how I make a living, and they're just a bunch of literal junk that may or may not pay a dividend. It's a cool number in theory if you ever were to get it. So is the lottery. So I actually for anybody that for anybody that is in dividends, I love this list for them.
yeah, it's just an easy way to see how or it's an easy way to compare
Mhm.
your dividend stock list and see who's paying the most dividend. Um, and it doesn't mean you have to go buy it. It means it's a good way to pick something to go research.
Yeah, yeah. Hey, check this. If it's not on this list, why are we? I guess if a YouTuber's promoting it and you're curious and it's not on this list, that would be where I start. Does
Right.
it not pay the dividend? What's the frequency? Not quarterly, monthly, annually, but do they actually pay that dividend just in general?
Yeah. Yeah. Yeah.
Um,
This none of this is actually telling you to buy. This is hey, this is something to go research.
yeah, just a list of some.
Right.
What's this last clip? Oh, now this one I like. So as a trader, for people that have been following the growth account, I want to use this more. I've kind of had mine yet, just my picks in general. But when the cash gets built up in the growth account, we'll take full advantage of this list because this is your top 25 put contracts to sell for next week's expiration. Now this gets posted weekly,
It does.
and your average return, I guess, on all of these is a little over 50%. Well, half a percent, sorry.
Oh, yeah. Yeah.
Mhm,
Yeah. So this is just the top and I don't even know if I did the top 25 for this one, but
mhm.
there's I don't know, well over 200 stocks in here that it compares. And so the average return right now for the ones that it compared was 0.55%. So
Nice.
and this is organized by total return. So
Okay.
it's basically trying to it gives you the best return for the capital that you're putting up to secure that put.
Right. So, again, you need the cash to buy 100 shares. So,
Mhm.
right now, charge point, couple $100, and you would sell the 150 strike, that's a 15 deltas, which I like selling in the teens. It looks like all of these are. Expected move 63 cents, implied volatility, probability of expiring worthless is 75%. Which I would say is a little, I guess with and I would argue maybe it's a little bit higher. But you're putting up your couple $100, and collecting $6.
It's a
Yeah,
4% return.
yeah. So these, what I like to do, because I have looked at this list, I'll go here and I'll check things out because there's some almost every week there's one that just lines up with the zone of mine. Your price will be. Can I get my? Let me just get my little marker out here. So we got price has sold off down to here. I have a zone, right? We'll call that a zone. And your put, the strike price it's telling you is like right here. I'm like,
Right.
okay, I'm expecting a bounce or some sideways action before it turns around. I sell this, it expires worthless. And there's always just in the top few. So far, every time there's been one, forgive my scribbling all over everything. There's always been like one that just like stands out. So you get the volatility, the price action lines up with it, and it just becomes I don't know. I like to call it free internet money because I don't know how else to put it. Which I know that kind of paints a bad picture for people that just don't know what they're doing. But you never bought anything and you just made free money. It's just I can't come up with a better term for it.
Yeah.
Uh,
I mean, it's I mean, The risk is you could be assigned shares,
Mhm.
which, if you're doing this right, really shouldn't matter to you.
Yeah.
Um, so, I mean, yeah, it's kind of free money. It's free money waiting for you to buy share. You're getting paid to buy shares at a price you want.
Yeah. Yeah, because a lot of people like Mara. A lot of people like Mara right now. So this made it onto your list. Current price sold off to 22. So there's your earnings date, which is always important to because no matter what's going on earnings, you could catch those shares real
Right,
quick. And maybe just something to think about.
right.
You're saying sell the 19 strike, right? And where's that? Your premium $63 just for selling that. So without ever even buying a single Mara share, you could sell the 19s, get a free $63, and if it goes down, you own Mara at 19.
Right.
Most and right now, I think a lot of people would like to buy Mara at 19.
Yeah.
Uh, so yeah, I think there's a lot now of the investment stuff. All that's cool, but as a trader, uh, the making money part, right? Like growth is cool, but in theory, you shouldn't be checking your account that much because you're
Yeah.
gonna get emotional. You're gonna make decisions. But I think this has got to be. I want to say it's my favorite part. Having
Well,
this data just put together for you.
yeah, you're a trader. That's what it's designed to do, right? It's
Mhm,
data
mhm,
for what you're trying to do. It's this is specific for trading or creating income, where the other
mhm.
stuff is specific for investing. So,
Right. Keep the emotions out of it.
mhm,
Emotionless investing. Yeah, and then, how can I make money? Because my bills, I can't tell them I'll pay them in 5 years when Tesla goes up. I gotta pay they come every month.
right,
So,
right,
as a trader, I need to make money, and so that's why I think I like this a lot.
yeah,
But this is that's the one that I would say gets the most eyeballs, I think,
yeah. In our
right now.
group, everyone waits for this one.
Yeah, yeah, I know, and there's usually a question. "Hey, what do
Oh,
you think about this one?" Like, I'm usually, like, breaking down zones on this one.
oh, and that's usually probably the biggest question is which one's near zone, and of course I'm just like I don't know. I haven't looked at them all.
Yeah. Because
Go to
you go live as well, right?
Yeah, so this list comes out every Friday, or sorry, every Thursday afternoon,
Uh-huh.
and then I go live Friday mornings with the groups to talk about this list, and we all come up with a plan on what we're doing.
Nice. Well, let's not drag it on. So, I guess the normal stuff, right? The like, the subscribe, the Patreon link is in the description. That is where you get access to all of this. Um, I'm about to start joining you on Friday mornings.
I don't. Are you gonna? You'd have to wake up.
I know, but Friday's like my one day I specifically sleep to the bell. 'Cause I don't wanna make it things trade differently on Fridays. I don't know if you know this, but a long time ago, like, I would write down my wins and losses, green day, red day, and I physically marked it on a calendar with markers, and I noticed a lot of my red days were just Fridays, end of the week was
Sure.
like, "You know what? I'm just gonna take Fridays off."
Yeah.
And, so now Fridays are just management mode for me. So I specifically will sleep to the bell so I don't get tempted by any, pre-market dip buys or anything like that.
Yeah. Yeah.
Uh,
And just quick thing. We build our plan Friday morning from 8
mhm,
to 8:30. And then I typically pull the trigger maybe an hour, but at least 30 minutes after market open.
mhm.
And we do this on Fridays because I want that theta burn over the weekend.
Nice. Yeah, it's not a bad play. My options bot would do Friday at noon,
Okay.
Central Time. So I love that plan.
Yeah.
Um, well, let me say we'll wrap it up. Anything else you got to add?
I think we covered it.
Boom. So for everyone else, make sure you subscribe. We got a ton more AI stuff to go over. So again, like, follow. This is what we're using. Like I said, middle class goes away. There's going to be rich. There's going to be poor. So when we talk about preparing for AI, that transition period is going to get awkward while everybody figures out what side they're on. This is the actionable side of what we're doing, where we're putting our money, how we're using it to make money. all of that. So if that's ever caught your attention, this is exactly what it is. So check us out on Patreon, and we will see you guys in the next video. Have a good one.
See ya.